Hey traders, Nick here on Nvidia. It is 1-3, the day Apple broke the market. Again, Apple lowered its guidance, so all stocks are getting hit hard. Nvidia is a momentum stock, and it is down almost 6% on the day. Now, Nvidia is an expensive stock it was an expensive stock. It has fallen from grace. Up here, everybody loved it, and everybody, I remember saying, you must have it in your portfolio. And here it is 60, almost 55% lower. And nobody said go out and buy it. At least none of the people that said you have to own it up here are saying, at least the ones I listen to. Okay, so now what? Here's the thing. I'm going to wrap it up inside the whole macro thing. My perception on the market is that we have too many fears, and sentiment is more of the crisis than the actual fundamentals. So if this too shall pass as far as sentiment, then we will have a rebound in the first quarter. So meaning that eventually the stock market will find footing, and it probably has one more leg lower. I thought it would have already started, but this 1100 run day last week or recently in the Dow kind of like messed up the neckline a little bit. But I am short-term bearish with credit cards. You've seen my trades anyway. So short-term bearish, but for the midterm, meaning middle of next year, we should have already recovered in this. So the things at hand are the Fed, and so that is growth on the line there, and also more importantly the tariffs, which is the headline, and then Powell whenever he talks. So three egos. If they kick the can or they kind of like come up with some sort of a deal with China, everybody's losing money here. Nobody's winning. But I think China will lose more in the long term, because if you're thinking of starting a company to manufacture something, you're not going to go to China. You're going to go somewhere else. If you're already making in China, you're already looking at somewhere else. And the longer this lasts, then the higher the odds that you're actually going to find somewhere else to build it and then leave China. So China's a loser, I think, in the long term. Meanwhile, back to the point, is Nvidia is an opportunity, I think, on a 5% dip day. Could it fall? Is this the bottom? No, I don't know if it is, but it's way better than up here, I can tell you that. And Nvidia is now down to 18 price to earnings. That's trailing price to earning, maybe 19. So let's double check that. Meaning that this is actual, not forecast. Okay, so this is price to actual earnings, trailing 12 months, TTM. Okay, so almost 19. That's what Apple was before it fell from grace. Google is a lot higher than that. Facebook is probably around that now. I don't know. Amazon is 100. Just to give you an idea, AMD loses money. So AMD's number is incredibly expensive. Intel is cheaper. So relative to Intel, this is still expensive. Intel is probably in the 12s. I'm just guessing here. So I can't argue for cheapness. I can argue for relative cheapness to what it was before, right? And if indeed it still has all these great technologies that are going to be player in the cars and the AI and the gaming and all of that, yeah, Intel is about 11. So then the argument is I can start building something, okay? I can buy the stock at 130 or 28, 29. But that puts me at risk right here, right now. So I can nibble. But before I do that, I like to change. This is a daily look, one day at a time. So about a year's worth of data. I like to go out. This is a weekly look. So about 5 years it was, but now I reduced it to 2017 on. And you can see that this may not be the bottom, but this is the area from which they broke out. So if I want to, okay, I want to mark it up. So if you think, okay, they consolidated quite a bit of time here, through 6 months-ish, 7, 8 months, and then they decided on this earnings report back in May of 2017, they decided, no, wait a minute, there's so much to like in this company, and they went off to the races. And then they had a short stopover right here, which is about where it is right now. So short stopover meaning support is not very strong, and usually candles like this are weak hands, meaning money came too fast. So they might overshoot lower, but once it falls into this zone right here, which is it's hovering just below it, above it, then it should be support. So if the market's correct another 10%, this is probably where it's going to go, 115, 110, but I believe it'll be good support. So having said that, if I want to buy it now, I could instead sell puts in it. I did a video on Apple. And this is a wild card, and it's an expensive stock. So selling puts takes some guts. But if I have guts to buy it here, selling puts is less risky because I'm building a buffer, provided one giant assumption that has to be true, that I can and I am willing to buy it. If I cannot buy it, that creates a whole bunch of problems that could blow up accounts, because then margin calls come out, because the idiot brokers will let you sell the puts you can't afford in your account. They assume you have the money to bring in to cover your bets. But if I'm doing it without having the money, that opens me to, what if the market crashes? My account is blown out. So I don't sell naked puts unless I can do it. Otherwise, I don't do it. So instead, I can sell a put spread. I'll share some ideas and some other write-ups, but I'm starting to think about it. Or even the easier way to do this is I can buy calls instead of buying the whole. Spending $130, I can spend a few $100s to make a long-term bet on a rebound. So actually, before I do that, I'm going to put two boxes. One, as far as I have not checked premiums. I did it on purpose because I want to give the spirit of it and then to start thinking about it, because we still have so much going on right now and it's not a sure thing yet. Okay, so if I wanted to sell puts, I want to hide just below this. Okay, a lot below this if premiums are there. I haven't checked the premiums. They're probably there. This is a momentum stock. It moves fast, so premiums are high. Okay, I want to put the other box is, okay, if it rebounds, where is it going to go? There's a box that's going to be over here, and then I'm going to put another box up higher, the hopium trade, that it goes back to other levels. Okay, so if it does bounce, it's going to go back to from ledge to ledge. Okay, so there was a ledge right here. The bigger ledge is right here. I drew actually this head and shoulder pattern, and it's played out. Usually the drop is about this much below it. So it still has technical room to fall and will probably fall into this level, but sometimes they don't go all the way in the pattern. I look left, and if I see a contention level, I'll probably say, okay, it might stop here. But you can see why this level still can come true because of this drop. I put a small, I'm not a technical analyst, so a technical analyst would probably have done something like this. Okay, so this is the drop that happened. So I expect it to go down by that much, and they do this. So they expect this to come, just to let you know. All right, so upside, it will come here, it will find resistance. Why? Because this was a ledge it fell from. This was a ledge it fell from. So there are ledges all the way across. But if I'm playing out in time for, say, June of next year, I can buy calls or call spreads somewhere around here. I can sell puts or put spreads a little bit shorter in time, or a little out in time, way out in time, maybe even to 2020, and say, okay, in the long run, this stock is going to be okay. So the longer in time I go, the lower I can drop this and move my risk out. So what does that mean? It means I'm creating a buffer from here to here. I have, what is that eyeball? $30, $40 lower from here. And if you divide it, you can see it's a good buffer as opposed to just buying it right here. So the same concept as I shared in the Apple video applies here. It all depends on the intentions, the level of risk that I can take, the level of risk I'm willing to take, my overall market look. So the markets right now are stuck between a rock and a hard place. And tomorrow we have Federal Reserve head talking in the morning, but just before that we have the jobs report, and that's going to be nasty. Nasty is hot, too good, and that might spike some things and spook out people, but I don't think this time around. I think the Apple thing today may have caused a tizzy early. Let's put it that way. Okay, so again, the trade here was on Nvdia. I can nibble long. If I choose to go long, where would I go long? It depends. I could pay up and go long right here with the stock. I can pay up, go along right here by buying long dated calls, say to June, May, whatever that's available, middle of the year, and close to current price, so chance to double my money at a high odds, or go up there and buy them cheap and make it a lottery ticket, which is what I did. And what's cheap? I mean, if I target the $200 level, it's not that crazy if I give it 6 months to get there. I don't need it to get there. I just need a move, a push. I need it to go boom, or a fast push in a momentum stock will explode the premiums on the upside. So there are many ways of doing this. If you have any questions, let me know. Nick signing out.